Good morning and welcome to Beyond the SEAF model. I'm John Kosar filling in for Jack. This data is through the end of last week. Let's get started. So we're going to begin by showing you where to find this data within the research center. We're in the research center now. So we're going to go to the SEAF model. And then we're going to scroll down quite a bit. So here are the actual signals and the changes from last week to this week for SEAF and also for SEAF Ultra. If you want more information about SEAF Ultra, you can get it right here at the bottom of this tan window. Here's the model itself, the chart, and right here down near the bottom, click here for the updated SEAF model rainbow charts. I'm not going to click it, rather I'm going to go to another window that I have open because I have the chart sized so you can see it better. But let's go there and run through the report. This is available on the weekend along with the SEAF model, usually by midday on Saturdays. So here's a little bit of information on how to interpret SEAF. Here's the actual model itself. Let's look at what happened between this week and last week. This week, we actually retained Communication Services XLC here. It's number 1 this week. And we also retained XLY. It's number 3. The difference is financials is now within the top 3. Now I'll explain to you in just a second why the top 3 are important to us. And look what happened to technology. Technology was number 1 last week. It was ranked number 1. It fell to 3 off the bottom. Why? Because in the trading and in the tactical time frames, which are the most sensitive because they're shorter time frames, it fell all the way to number 11. So that's the lowest that it can go. Even though we're still number 1 here in strategic, a lot of money left technology over the past week. And seems like a defensive move. We never really know why the money moves around. We don't need to know why, but we need to know where the money's going and where the money's coming from. That's the premise of this model. The reason we look at the top 3 is we back tested this to see how we could squeeze the most juice out of it. We got the best performance, the best defensive numbers by always being invested in the top 3. So if you're following the model the way it was intended to be followed, the model is updated every Saturday, showing the data from the previous week. And any changes that are made are assumed to be made the following Monday on the open. So the changes we made for all of our managed accounts this morning is we sold out our technology on the open, and now we're equally invested in XLC, XLF, and XLY. Let's move on to the heat map. Jack talked about the heat map a little bit last week, and last week the heat map up at the top here, it kind of looked like it does in the middle. We've got some red, we've got some green, really no consistency in a solid color all the way across. That has really changed this week. A lot more conviction now. Communication services, financials, and for the most part, consumer discretionary. We all have shades of green here. That means we're getting asset flows in multiple time periods, which generally means it's a little more sticky. When you see it as it is here, where you have a bunch of yellows and oranges, that means there's really no conviction in these particular sectors. Healthcare, real estate, and utilities are those sectors this year, or this week rather. And then as we get near the bottom, that's when you really start to see things turning more red. You can see, again, technology. We had a very aggressive exodus out of technology last week, which caused it to fall from number 1 in the overall ranking score all the way down to 9. Let's look at the aggregate asset flows. This chart is relatively new for us. We just we're playing around with some numbers in the office, and we found that this was a very good way to understand the bullishness overall for the S&P 500. So what we did is we took the AUM, separate AUM for the 11 sector spiders, we added them together to come up with an aggregate number, and then we put the number on the chart here with the S&P 500 below it. And what we found that after we ran a 21-day moving average over the data, which is our tactical time period, gives you a pretty good idea of what the overall conviction, the bullishness in the S&P 500. You can see right around 320 billion here. That was a ceiling for us. That was a peak that we made around Thanksgiving. And then assets in aggregate started to move out of the S&P 500 as we measure them individually by the 11 sector spiders. We had a little stall in the S&P 500, and SPY actually is what this is. We came up and retested that same number, failed. That was the top of the market. We stayed underneath the 21-day moving average until the middle to latter part of April. Once we got back above the 21-day moving average, look what happened to SPY. So now we've broken through that 320 billion, and we're still above this aggregate AUM is still above the 21-day moving average. That means it's too soon to be selling the market. We're still having asset inflows. So that's how we look at this. And once we do stall and you see the Asbury 6 start to turn red, you're going to probably see this number start to turn down through the 21-day moving average. That'll be a very strong signal for us, and it should be for you too, that now we should start to play defense with our accounts, with our portfolios. So let's look at our top three. So XLC is number one this week. So we'll scroll down to XLC. So these are updated, again, through the data from the end of last week. They're available midday on Saturday. This is a very good way to understand where the money's going. So this is XLC, and it moved into favored status, just eyeballing this, beginning of August, and it has stayed there since then. Note the relative outperformance since then. One, there are other inputs. It's not just 1 and 1 equals 2. Interest rates, tariff news, maybe some of the bigger stocks that are in this particular sector are having earnings that can also affect price. But generally speaking, assets in are going to drive the price of that ETF higher. Assets out are going to push it lower. So we've got a nice strong trend here staying in favored status since April. Since the beginning of August. As long as that stays the case, as long as that remains the case, we're going to see more relative outperformance from XLC. Let's just do something a little different here and take a look at XLC on a price chart and tell you what we're looking at. You can see that we broke out to new, fresh highs here back in the end of June. That started to draw in more money that we can see on the rainbow chart. We're making new all-time highs. The other thing to pay attention to, this is relative performance of XLC versus SPY, which is the S&P 500. See how flat it was? We couldn't really break out to new all-time relative highs for months. We are doing that now. So what we're seeing on the outright chart and on the relative performance chart, it kind of reflects what we're seeing when we look at the rainbow chart. This is right now, this particular sector seems to be hitting on all cylinders. Let's move back to the rainbow charts and let's look at number 2 on our list this week, which is XLF. So let's scroll around and find XLF. Here's technology. And here's XLF. XLF, I think this is since this is about 2 weeks old. I should say it's been in favored status for about a week or two. Not very long, coming out of a void in the middle to latter part of August. But look, it's already starting to drive a little bit of relative performance. Let's go back to the price chart and let's look and see what's going on with XLF. XLF is kind of in an interesting place. It's trying to break out to new all-time highs and hold them. It's tried once, twice, 3 times. This one looks like it might be holding in a little bit, but it's still underperforming the S&P 500. In order, those assets, as we see here, are going to have to remain in favored status. SEAF is going to have to stay in favored status in order to get enough horsepower to be able to drive the relative performance on the other side of the 63-day moving average here that I'm pointing to in yellow, which would give us the quarterly outperformance that we want to get on board of a new trend. Right now, this trend is still developing. Let's go back and let's go to XLY, which is number 3. It's the 3rd best ranked. So here we are, consumer discretionary. You see consumer discretionary really since May has been moving into favored, moving into neutral, going into avoid. It really hasn't had a strong trend. We had a strong trend back here from basically Halloween through Christmas. And look at, this is what happens when you get a sustained period where you stay in favored status. We are not there yet. Let's take a look at that price chart. This makes a lot more sense to me now. We're still right underneath a pretty important resistance level that we set back in December of last year. You can see relative performance it's been a relative performer. It's been staying with the S&P 500. Once we get through here, which is eyeballing us about 242 in the price of XLY, that should bring in some new buying, and what we should then see is maybe a little bit more time, steady time spent in favored status. It's not there yet. 2 more that I want to look at before we wrap it up, because very interesting what's going on. We're going to go to technology. So technology, technology originally showed up in the top 3 in the SEAF model on April 24th. That's right here that I'm pointing to on the chart. When the relative performance chart of XLK versus SPY, which you see down here, it was still moving downward. It was still underperforming the S&P 500 SPY. Ever since it got into favored territory, well, this time it stayed there. This is about 4 months. And look what happened. We had this huge period that we caught most of, by XLK staying in the, I think it stayed in the top 3 for 15 of the past 16 weeks. Well, now we're falling out of favor, and look what's happening. XLK is underperforming now, and if we go over here and look at the price chart, we can see it's gone flat. It really hasn't turned lower, but since the S&P 500 keeps moving higher, it is actually underperforming. Since August the 12th, it's underperformed by 3%. And it's starting, the relative performance line is moving underneath its 63-day moving average. That's a bad sign. Unless it can recover quickly over the next week or so, we're going to go into a situation where it's underperforming and very likely to drive the price of the S&P 500 lower. Tech tends to lead the market up and down. So this is something we're watching really carefully. It isn't actionable yet, but this is something that you should be looking at every week when the rainbow charts come out over the weekend, and see if we stay in neutral or if we're moving back to avoid. If we can't get back up into favored status, we're going to see more weakness from tech, and that's usually a problem for the market. Let's look at one more to see what it looks like on the other side. If you're investing, it's good to know, sometimes it's just as good to know what not to be in as it is to know what to be in. And healthcare has been down at the bottom in terms of the SEAF rankings for most of this year. Back in, let's call this May 1st, healthcare dropped into avoid status. And outside of just a little quick attempt to get into favored and just failing miserably, it stayed there. Look at all this relative underperformance we've had. So this just means it's not time to get into healthcare. At some point, healthcare is going to be a buy. Let's look at it from a outright chart standpoint. It's been underperforming the S&P 500 since May 1st. That's the May 1st that I saw when we first moved into a void status on the rainbow chart. It has underperformed the S&P since then by 18%. So just knowing not to be in healthcare and look for other places to go, it's a big deal. That's why these charts are so important to us. This is how you should be using them. Jack will be back with you next week. I hope I put a different spin on this that was interesting and helpful to help you understand the data better. Have a great week. And again, Jack will be with you next week. Thank you.